Hello and welcome to the latest episode of No Accounting for Taste with me, Matthew Ord, and the familiar voices of Accounting Web's managing editor Richard Hattersley
Hello, everybody.
and technology editor Tom Herbert.
Hi, Matt. Hi, everyone.
We're back for another look at all the big goings on in the world of tax and accounting, and we'll be kicking things off today with a look at making tax digital for income tax. Now, we know it's going to mean a massive change in the way accountants and bookkeepers work and serve many of their clients. Now, it's unlikely to all be plain sailing, and preparing for the change is going to take the right support and, more importantly, accountability. As such, Accounting Web has launched the MTD Accountability Club, which will do just that as we follow a group of accountants and bookkeepers making their preparations for the first mandation date in April 2026. Now, alongside this, we're running a short survey on how your preparation is going so far. The survey is still live, and we'll link to it from the page that accompanies this episode on Accounting Web. But before then, I believe, Richard, you've had a peek at some of those initial survey results.
Yes, yeah, thanks, Matt. So, yeah, as Matt said, we're running this survey in conjunction with the MTD Accountability Club. The MTD State of the Nation survey is just kind of like a quick barometer to find out the pulse of the profession when it comes to MTD. We got some early insights from the survey, which I think are quite interesting. But for us to truly understand the impact, as Matt said, we kind of need people to take the survey. So be sure to take just a couple of minutes out just to give us your opinions. It shouldn't take any more than a couple of minutes, and we'll track these results throughout the year. So the first question we asked as part of the survey was whether readers thought MTD was going to go ahead. The results so far, I mean, it's somewhat intriguing actually. 57% think MTD will go ahead, 20% don't think it's going to go ahead, and 23% still don't know. And you can kind of understand the skepticism there with the 20%, even the 23% there who are still unsure. The project has been on and off for a number of years now. And so having to, for those accountants, bookkeepers who have taken the survey to go back and forward to their clients to tell them it's going to happen, it's not happening. You can see it go on the comments on any answers in the counter webs. People are kind of feeling a little bit jaded about the whole project. So that's understandable that 20% don't think it's going to happen. And also, but we're kind of the closest at the point to MTD ever launching at this point. It's the closest we've ever been. We've not quite reached the finish line yet. And aside from the Minister on Money box, it's not exactly cutting through to the mainstream. So again, I can understand why some of those people still think we're not quite sure if it's going to happen. That said, with the majority of people still believing it's going to happen, it may not be a massive number, but I think HMRC probably would take that as a positive, considering how far we've come. If you think back, probably even to like November last year, I think it would have been a different picture, these results. I think probably it would have tipped in the other direction. Many people being even more skeptical that HMRC would be able to reach that launch date of April 2026. I mean, has anyone got any thoughts on, is that kind of where everyone else would expect that number to be?
I think so. I'd like to come in on your point about it not cutting into the mainstream. And last week I went to an event that Free Agent put on in London. They had Craig Ogilvie, the HMRC's director of the programme. They also had James Murray, the HMRC chair and Exchequer Secretary to the Treasury. That's a mouthful. And they've talked about launching a sort of communications plan for those 900,000 who are going to be affected by the April 2026 mandation. But I think Craig Ogilvie made the point that there are sort of more than 12 million people in self-assessment. So this campaign is never going to be a sort of Coronation Street TV ad style campaign because they don't want to spook the horses. And they're trying to target it as much as possible at, I mean, those 900,000, yes, but I think of those 200,000, I think are unrepresented, which I think is going to sort of represent the biggest challenge of sort of getting those people on board. Perhaps they're the landlords who don't really think of themselves as businesses. So yeah, I think if it's not cutting through to the mainstream, fair enough, it might be a bit nebulous and hard to understand. But I think it's kind of by design as well.
Yeah, that's a good point, Tom. I'm sure probably in the next few years, as it moves down the bracket, um, that's when probably the communications will be a little bit more amplified, shall we say? Maybe that might be the Coronation Street promotions in 4 years or so. But it makes complete sense for it to be a little bit more targeted at this point. The next question we asked was around the current focus of people, of accountants, bookkeepers. 50% are currently focused on client communication, 25% focused on internal preparation, 18% are considering their technology choice, and 7% are exploring joining the beta. Now, I guess what's telling here slightly is the number of people focused on joining the beta. That's quite a small number there, 7%. I'd kind of argue that it would be beneficial for more people to kind of join the beta because it sort out some of the other areas there, whether that is internal preparations or client communications. Um, the lack of engagement with the betas is sort of underlined further by the fact in another question we asked, 94% of individuals said that they haven't tested their chosen MTD software in a live beta environment. I think, Tom, we've kind of seen the stats, which the kind of freedom of information stats, which are out there, the number of people actually engaged with the beta. So I'm not particularly surprised there by only 7% joining the beta.
Yeah, and I think what I've found is that with conversations with accountants and from the event last week, which took feedback from a varied bunch of accountants from sort of smaller firms to a large firm like Gravita with potentially thousands of people who were impacted, is that it wasn't. I mean, they haven't had a massive opportunity to test the softwares. I think there's 27 softwares now on the available now list,
Mm.
but it's fairly recent. I mean, going back 6 months ago, there were only a handful on there, and I mean, we've only had the quarterly updates. Available. We don't have the final declaration yet, so they haven't had a great deal of time to join, and that sign up process to get clients on there is I mean there are 13 steps. I think it's HMRC is working to bring that down, to make that a more streamlined process, but it is quite convoluted at the moment. And I think the article I wrote that was published earlier in the week, a sort of slightly clickbaity title in terms of MTD isn't a software problem, but I think for a lot of firms, just as our survey found, it's client communication, internal processes, just working out how they're going to land the thing is
Mm.
going to be a bigger issue.
The client communication makes sense as well, considering in April, agents and affected taxpayers had the letter on their doormats around the changes. So it kind of would make sense that the vast majority of individuals taking the survey were focused on that at the moment.
Yeah, I mean
Um,
the software is going to be ready. Like I think that's like that's what software companies do. They build to a deadline, and they as long as the HMRC backend is there, then they'll be able to hit their marks. It's everything else. It's the mechanisms to get that information into a state where you can submit it that I think is causing the most headaches.
the readiness of the profession was also kind of underlined again by another question we asked, which was around kind of the general readiness. 48% said they're currently at the planning stage. 19% say they are researching. 16% said they're implementing. But 13% said they haven't started at all. Um, I guess that 48% there kind of lines up with the 50% there focus on client communication. Um, maybe that's part of their planning stage, kind of having those conversations with the clients. 13% though that haven't started, I guess that is those that we talked about at the beginning. 20% said they don't think it's going to go ahead, or perhaps those that have already maybe put a lot of legwork in before the rug's been pulled out, and maybe they already have a sense of what's going to happen, but they are maybe taking a step back and just hedging their bets slightly, or maybe they might not even be affected in this first tranche. It's difficult to know exactly, but I think it feels as if though there's a general element of firms at least being proactive in how they're going about it. The vast majority, aside from those 13%, are at least doing something. So I think that is a positive, as we've mentioned before in the podcast, going along to events, webinars on Accounting Web, whatever it may be. People are engaging. They feel like they're asking um, those questions to work out just how it's going to affect them and their clients more so than before, where it didn't really feel that sense of urgency was there, which is what I'm getting from these stats. Another question we asked was around just the understanding of the MTD for income tax requirements. 35% said that they're either very confident or quite confident, which does leave around 65% who don't feel completely confident about their understanding. This again is kind of aligns with some of what we're seeing on webinars and events, where people are still asking those questions which they've been asking for a number of years, and I guess it kind of takes that repetition to get those questions cemented in your mind. But also, I suppose it's just such a massive beast that people are. It takes a while to get your head around all the ingredients involved. But as we've seen also with the release of the PCIT guidance, there was that question over when do you need to get a client sign off at finalization, as raised by Robin Milstead recently on Accounting Web and in various other forums. And that goes to show that there's still various other different quirks that still need to be ironed out and understand. The PCIT is going to be revised to include that element coming up, but more on that later. But it goes to show that there's still questions being asked, and that may perhaps result in some people not feeling like they're 100% confident with what's required. As a quick tour there of some of the early insights from the survey. It's currently only a smallish sample of the profession, so what we need is more people to get involved, and especially over the summer months to keep getting involved in this survey, just to track your progress. So I urge listeners to just take part in the survey, and we'll continue to track the results and feedback on the podcast and on Accounting Web as those results come in.
Excellent. Thanks for the insight, Richard. Yes, it'll be interesting to see the direction of travel with all that data over the coming months. Tom, moving on to yourself, you've got news of a blockbuster purchase from the world of cloud accounting software. Can you tell us what's been happening?
Yeah, so the broad headlines are that Kiwi Cloud pushers Xero has acquired bill payments platform Melio for $2.5 billion. Our American cousins may be familiar with Melio, but on this side of the Atlantic, it's pretty unknown outside of a select few accounting tech nerds like myself. So it's probably worth a quick run through who they are and why Xero has paid this massive amount of money for them. It's basically a bill payments and invoicing solution where users can manage and schedule their payments. It can also function as quite a lightweight accounts receivable tool for small businesses, so they can issue their branded invoices and send payment requests through with a pay now button, so customers can settle their balances with credit card or ACH bank transfer, something I had to look up writing this story. So even if they don't have a Melio account, they can settle up. Melio then integrates with accounting software like Xero, so potentially reducing some of that rekeying work, speeding up reconciliations, that kind of thing. I guess eventually, once the integration's been tightened up, Xero's US customers will be able to pay their bills without leaving the Xero platform. So again, sort of saving time and cutting out some of those errors that could happen when you're switching between different systems and different screens. It's all quite standard so far, but I think the interesting part about Melio is that its tech can be white labeled and embedded into existing platforms. So the financial institution Capital One, e-commerce giant Shopify has it. So if your business needs a payment solution, then it's right there.
And don't we already have the payment side of this in the UK already, Tom?
Yep. Xero customers in the UK already have an end-to-end accounts payable workflow. That's via Cresco, the sort of open banking partner with Xero. I mean, that launched back in November 2023. So, I mean, from a UK user perspective, you're not likely to see any changes to the Xero platform in the near future. It's one of those, I heard the news. I was in two minds about whether to cover it for our site as it's such a North American story. But I think the more I read about it, the more angles I could see. So it ended up being a bit of a no-brainer. I mean, first and foremost, just from a macro level, it's a big change in strategy from Xero. They've got this general ledger software that people love. Not everyone, I hasten to add, but 4.5 million subscribers can't be wrong. Um, Previously, they've kind of restricted themselves to buying smaller tools that can add functionality, things like HubSpot or InstaFile that became Zero Tax. Last year, they bought Sift Analytics for $70 million. But I say you don't need to be an A-grade number cruncher to work out that $2.5 billion is considerably more than 70 million. So, I mean, Zero's now going big with its purchases. On the day of the deal, I spoke to Xero's CEO Sukhinder Singh Cassidy, who was still going strong in the evening despite a long old stint at the media grindstone. She told me that they won't often make a move of this size, but it very much spoke to the size of the sort of US opportunity that they saw.
And as you mentioned there, Tom, this presumably forms part of Xero's continued attempts to crack the US market, the big one.
Yeah, very much so. We've whether they're going to go the way of the Beatles or Robbie Williams. Who knows? But I mentioned like 4.5 million subscriptions earlier. So I mean that's made up of 1.9 million subscriptions in Australia, 1.1 million here in the UK, 600,000 in New Zealand, where they originated from. But I mean, despite being at the coalface in the US for more than a decade, they've got 400,000 subscriptions, which isn't to be sniffed at, but I mean, it's not much of a dent compared to the £800 gorilla in the room that is QuickBooks. I mean, QuickBooks Online alone has 6.5 million subscribers last time I checked. Melio brings 80,000 customers to the party, which, and a decent amount of revenue and a couple of new angles on cracking the US. So I think Xero is very much betting that Melio can give it a leg up in terms of tackling America's massively fragmented payment system. That there's a huge number of national or regional financial institutions like banks or credit unions. This makes getting bank feeds sorted out a bit tricky and kind of negates a few of Xero's natural advantages. And there are loads of different payment methods, so e-payment platforms, credit cards, the aforementioned ACH, wire transfers, and still a huge reliance on paper checks, which, I mean, for anyone listening in the UK, will raise a sort of Roger Moore style eyebrow at that one. I'm not sure I've seen a checkbook in the last 10 years.
And does being in the payments game add another source of revenue for Xero, Tom?
It does, quite a substantial one at that. So Xero can now add income from payment processing fees and other financial services to its existing subscription revenue. So in the past year, Melio processed more than 30 billion in business payments and pulled in revenue of 153 million in the same period. I mentioned earlier about being embedded in e-commerce platforms like Shopify, and I guess there's a new sort of customer channel potentially there as well. So if a business has joined Shopify, for example, and suddenly it's there, it uses Melio to make payments, then there might be the opportunity there to oh, you don't have any accounting software. Well, it just so happens we've got a recommendation for you here. So yeah, it just adds a bit of variety to it all, I guess.
And finally, Tom, it's obviously a massive price tag. How are they going to pay for this?
Well, from a prosaic financial perspective, Zero asked institutional investors for, I think, about 1.8 billion Australian dollars to help pay for for the purchase. Obviously, Zero is listed on the Australian stock market, but hot off the press yesterday, so a few days after the purchase announcement, Zero has announced a few price rises in the UK. So yeah, it's things like sort of Zero Grow plan increasing to 37 a month, Zero's comprehensive plan increasing to £50 a month, and Zero's ultimate plan increasing to £65 a month. So I think some of the plans are remaining the same. So things like Zero Ledger, Zero Simple, and Zero Ignite. Some of the smaller plans were staying the same. It's the usual on the sort of accounting social media or LinkedIn. There's been a bit of an outcry about this. I totally get that firms or businesses that have chosen to go with Zero will be a bit hacked off by an above inflation raise. But I think with all these price rise outcries, I'm going to refer to my North Star and go with Billy McLaughlin's advice. So I worked with her a little while ago on an article about these, and I guess it's all about value rather than price. And if you're still getting good value from this software compared to other ones in the market, along with how much of a hassle it's going to actually be to shift over, then I think by all means run those comparisons. But as I say, I think particularly with the general ledger software that is known and loved, I think there's going to be a lot of noise, a lot of sizzle, but not a great deal of movement, I would say, off the back of this.
Smashing. Well, thanks as ever for the insight on that one, Tom. I want to see us out with a look at one of my favourite topics, audit reform, which I didn't think I would ever say a year ago, but here we are. A long-awaited pledge for reform was included in the King's speech in July last year, but progress has been typically slow. However, in a kind of widely welcome move, I suppose, the government, writing in its modern industrial strategy very recently, has again confirmed that it intends to update the regulatory framework for corporate reporting, transitioning the Financial Reporting Council, the FRC, into a revamped regulator that will uphold standards and independent scrutiny of companies' accounts, as well as accountability for company directors. Requiring better transparency from large companies will help avoid company failures and protect jobs, which is central to delivering a secure economy, it added, before confirming that the planned measures will be set out in due course. Now, these include everything from extending regulatory scrutiny to the largest unlisted businesses' audits and measures to oversee the audit market, as well as protecting against conflicts of interest at audit firms and building resilience so that audit quality is available to all companies that need it. One thing that's obviously been scrutinised quite a lot recently. And with the run of U-turns we've had from the government recently, Tom, it's nice to see them recommit to something like this in amongst it all.
Oh, absolutely. Yeah, I mean, this particular audit reform can's been kicked down the road so often. It's like basically one big dent. But yeah, I think, bearing in mind the original plans to reform audit came off the back of a series of quite high profile collapses, your BHS and Carillion and things like that. Actually, I mean, it's coming up to a decade that's been rumbling on here, and things like AI. I mean, obviously, coronavirus has shifted people's working patterns. The audit market's moved on, so I think it does need to be updated in some way, shape, or form.
Well, accountancy, audit and tax are very much in the spotlight widely in the industrial strategy, with talent, AI, sustainability reporting and money laundering regulations all getting a mention. Now, sustainability reporting could be a bit of a wake-up call. It's been lingering for a while, but the government has now said that it will soon consult on new UK sustainability reporting standards for use widely. These would be based on international standards, with the hope being that they would provide a, quote, high quality and consistent global baseline for sustainability-related financial disclosures. A final decision will then be taken on whether to create these UK sustainability reporting standards for voluntary use. Now, alongside those other nods that I mentioned to skills and AI, there's also a commitment to clearer and more proportionate money laundering regulations. And you've got some thoughts on this one, Richard?
Yes, yeah, I thought this was really interesting that this was tucked away in the report as well, especially the phrase there, clear and more proportionate. Now, before listeners get too excited, I don't expect that phrase "clear and more proportionate" to mean that the current regs are going to be watered down in any way at all. Probably, if anything, the scrutiny is just going to be as much as it always has been. I think is if we've learned anything from the past few years, is that AML is not going to be getting any softer. It's just going to become more and more scrutinized. We've seen that the professional bodies becoming more and more engaged in this and taking people to task who have not kept up their requirements as they should. This continued with the previous government, and I fully expect it to continue with this government as well. So apparently a package of changes are set to come in before the end of the year. As for what these changes might be, there's a key couple of sentences from the industrial strategy. They are, we also recognize the significant potential for new technology such as digital identity to streamline checks and processes for firms and customers. And then more specifically, this other line, HM Treasury will take steps to encourage the use of digital identity for money laundering regulation identity verification checks. Now, currently, the 2017 money laundering regulations do not specify a need for photographic documents in confirming ID. We've done like a range of webinars on the Counter Web, and this question comes up quite often. And each time the answer's always been, well, the regulations do not specify the need for this, but if it's good for your own internal workflow and what have you, people do find it incredibly useful. Now, things perhaps from going by what's been said here, on that part, things may change. So essentially, this would bring, if it's going to go the way that we probably assume it would go, it would mean that the money laundering regulations would be brought in line with the company house's push towards identity verification. So a bit of an alignment there. So I could certainly see that happening. Be sure to wait on the package of changes to come. But whilst we're talking about money laundering regulations, it did make me think about that consultation that landed, must have been about 2 years ago at this point, about the about AML in general and about who the oversight is for who has the oversight for AML. And there's a raft of all different changes, whether OPBAS, who is the supervisor of supervisors, will be given additional powers, whether there be the current supervisors there'd be maybe one who would take full power, maybe power would be taken away from HMRC and the professional bodies and given to this one super regulator. Happened a couple of years ago. We've not heard an awful lot about that since. So you kind of have to think that that's just been thrown on the scrap heap. But who knows if we will ever hear anything from that particular consultation. But we will be getting some news when it comes to money laundering regulations. And I'm sure readers will be looking and listeners will be eagerly awaiting what new requirements will be set for them.
That they will. And that full story, as with everything we discussed today, will all be available on Accounting Web. That's all we've got time for today. Join us on the next episode of No Accounting for Taste for a roundup of all the big goings on. But until then, take care.